Hello there, it's me again, the Blue Master. So on today's video we will be learning on how to use indicators. So we selected two indicators, which are namely RSI and EMA 89. So on RSI we will be identifying divergence, and then we will also do some of the most popular market patterns that we didn't cover in our previous video. Just to name a few, it will be cup and handle formation. We will also do head and shoulder. We will do double bottom, trend line, etc. So I hope you will enjoy this video and learn one or two things that will improve your trading journey. Thank you. Yes, let's quickly dive in, and I hope you'll enjoy the video. So I'll be using gold, then I'm on 4-hour time frame. I'm just gonna maximize my screen there, and we'll use the RSI. So on the RSI, I didn't customize anything. I use it as it is from the menu. I just added, I didn't edit anything, so I just use it as it is. So as you can see here, so our RSI, our divergence, will be identifying them where this RSI line graph went beyond the 30 zone. So this is 30 and this one is the 70 line. So that's where we'll be identifying our divergence. So as you can see here, the market created a low here. And so we will put our case. So as you can see, the dotted white lines, they should be on the red candle. So as you can see here, the market also created a low which correspond with this one. So the market created a low there, then it also created a low there. Okay, so here as you can see, the market created a lower low there. The market created a lower low. Then here, as you can see, the graph, the RSI line graph created a higher low. So this is how we spot our divergence. So this is a sign of reversal. As you can see here, let me just get that. So a little trend line. As you can see from here, the market is going down. I'm just gonna copy that, and then I'm gonna use it here. I wanna copy that, then I wanna use it here. So as you can see here, what the market did. So it's more like an uptrend. It's going up anyway. So they were going down, then the market here is going up. So it created a low there. But now by the time when it created a lower low, now here it created a higher low. Then this is signs of reversal. So this is where you could probably take your trade, and then the market will go up. So as you can see, the market went up, but it didn't push that much. So if you can see, check on our PDF, Universe Traders PDF 1. If you read through it, we actually stress about having a trader having daily or trade target. So this could be a very good trade. It's about 100 pips, so it can make you good profit. Okay, so let's just try and check again if you can spot any divergence. Okay, let's just check. Let's check. So Let's see if we can spot more divergence. So your divergence, you need to use once you see spotted divergence on 4-hour time frame, you need to confirm it on another time frame. So you at least have to have divergence on 2 time frames. So it should be either, let's say now once you spot on 1 hour on 4-hour time frame, you should confirm it on 1 hour time frame. So you should also have a divergence there. So at least 2. If you spot divergence on 1 hour, you should also have divergence on 15 minutes. Okay, so just looking for another divergence that we can spot here. Okay, I think we can spot another divergence there. So as you can see there, so the market here, as you can see, it created a level there. So this level that was created there, you can see there, market created this level there. So it created this high, and it also created this higher high, right? But on the RSI, it created a lower high. So lower high, higher high, they don't correspond. So this is a sign of reversal. As you can see, this is a sign of reversal high, then we have a high there. But now here we don't have a higher high on the RSI. So this is a sign of reversal. Okay, so that's how you use that. So don't forget, we use RSI, we need it should jump above the 70 zone. So there, as it's the 70 line, it should be above, then that's where we spot our RSI. Okay, so if you can check here, we have another one there that can also form. It's more like a divergence, and you can also use it as a double bottom. So this can be, you can use divergence, then you can also spot it as a double bottom. So you will have more than one reasons to enter a trade. So as you can see there, I'm having the market created a low there. It created a low there. As you can see here, it created a low, then we're having a low there, then it created a lower low there, but here on the market it created a higher low. So this, you can see that it's a sign of reversal. So you have a divergence there, then you have a double bottom there. So this is a sign of market reversal. Okay, so that is it for RSI. You can use this, you can actually try and check more. As you can see, there's another one there. As you can see, the market created a high there, the market created a high, then it created a higher high there, but on the RSI we created a lower high. So this also shows a market reversal. Okay, so I'm quickly gonna jump to US30, then we will see, we will do trend line on US30. Okay, let's go to US30 there. Then we're also gonna use the same 4-hour time frame. So I'm just gonna maximize there. Okay, so we'll try and look for a trend line here. Okay, there we have a trend line. I've actually already drew this trend line previously. So drawing the trend line. Some traders draw their trend line using the points of the week, but I draw my trend line on the body, on the closing and opening of the candle there. So once you draw this line, the trend line, so you don't have to take your trades once the price hits the trend line. No, you don't have to do that. So the correct way to use the trend line, you need to use it together with support and resistance. So as you can see here, the market turned there, so we have our support level there. So this support level was created after it was first our resistance, but after the market broke above, then it became our support. So we retested the support there, forming the first point of our trend line. Then we form the second point of the trend line there, right? But as you can see here, where the market touched the trend line, there is also a support level. So this is our support level, as you can see. So it bounced, it was rejected by the support level, not necessarily the trend line. So we actually combine, you actually have to combine the trend line together with the support, your support and resistance. So as you can see, it bounced there, then it broke above our resistance there, creating which became now our support, and then it also bounced there. So the correct way to trade this is you wait for, because of now we are using a 4-hour time frame, you need to wait for this candle to close. So you need to wait for this candle to close. Once it closes above our trend line, then you can take a buy. Should this candle close below, you wait for a retest, then you can sell. Okay, so that's how you trade trend line. You wait for the candle to close. Should it close above, then you know you can take your buy. Should this candle close below, you wait for a retest of the trend line, which will be a retest of the resistance level, which was our previous support, and then the market will now drop. So you'll now be looking for sells, no longer buys. Okay, so that is that. So I'm just gonna also try and spot divergence on US30. So as you can see there, the market created a high there. Okay, then we're having a high there. Okay, then it created a higher high there, but on the RSI it didn't create a higher high, it actually created a lower high. This is a sign of reversal, market reversal. Okay, so this way you can look for your sell opportunity. Then we're just gonna go again. So as you can see here, we are having a double top. So this is a double top, so you trade the double top, is a double top, then we are on our resistance. So we created double top resistance, which shows that sellers are in control, because the bulls tried to push the market up. They failed. They tried again, but they failed to break this resistance level, that the market formed a double top, then it eventually went down. Okay, so we're just gonna see here also, you can see here we also have divergence. So the market created a low there, then here we have a low there, then we have a low there, but here we created a lower low, then the market created a higher low, a lower high here. So this is a sign of a strong market rejection, strong market reversal. Okay, so I hope you learned one thing or two. We will now move on to the other patterns and discuss that. Okay guys, we're gonna be looking at one of our reversal chart pattern, which is the head and shoulder. So if you just go ahead and go to gold and check your 1 hour time frame, let me just navigate this with you. Here is our gold. Then let's go, make sure you're on the 1 hour time frame, and let me show you how to draw this head and shoulder. I'm gonna go ahead and delete that. That was when I was analyzing. So the head and shoulder is a reversal pattern. So what's gonna happen here, as you can see, we're having an upward trend. As you can see, a little bit of consolidation, but it's an uptrend. So what happens, in an uptrend we have a high, a higher high, which also has to be followed by another higher high. So now what happens is that you have a high, then a pullback, then you have a higher high, and the pullback of that higher high is usually it'll be aligned with the pullback that we had on this higher high. So as you can see, we're gonna draw this horizontal line. All right, there we go. So you had a push up, which is, this is a high, then a higher low, then a higher high, then the low, the correction of this higher high is aligned with the correction of this high. Then to show that the chart is losing momentum, the uptrend is losing momentum, instead of a higher high, which is higher than this, we have a lower high. Then after that lower high, the chart moves down and breaks down that neckline, as you can see, and continues to drop down. So as you can see now, from this you'll have your left shoulder. Alright, then from there you have your head. We call this the head. Alright, so, and then we have your right shoulder. Okay, there we go. So there is your head and shoulder there. So which means what you have is the correction of the left shoulder, this correction, and the correction of the head. As you can see, they are aligned. That's when we have our head and shoulder. And if we just take our drawing tools and just draw that, let me just see. As you can see, there is our head and shoulder. Then the market boom continues to drop, retest of that neckline, and another drop. So that's how we draw our neckline. To make sure that you guys understand, let me just go to a currency and show you how to draw it. So we'll look at Euro NZD. Let's just click that. And guys, if you don't know how to navigate through TradingView, we made a special video for you guys on YouTube. Just go check out the video on how to navigate this platform. And if you misunderstood something, you can just DM us at universe_traders, and we'll be happy to answer any question regarding the video we made. So let me just delete that. Let's look for that head and shoulder. There we go. Sorry. Alright. There we go. So as you can see here also, we have an uptrend here. So you have a high, you have a higher high, you have a low, you have a higher low, as you can see here. Then let me just write it for you guys so that I know that you guys can see. So here you have a high. Alright, I'm gonna remove that is your high. Then take a text again, then you have your high, your higher high, right? Your higher high. Then again you have your higher high there, higher high. Here is our higher high. And then what do you have here? The correction of this higher high, as you can see here, we'll just call it the low. And this low, as you can see, will be equal to the correction of this higher high, which is a higher low. Right? Sorry about that. Okay guys, so as you can see, you have your high, you have your higher high, you have your higher low, and this will also be your low. Let me just do this so that we understand one another. So this is your low, right? So you have your high, your low, your higher high, your higher low, your higher high, and you also have this low which is equal to the low of this higher high. Okay, so this higher high forms what we call a shoulder. So this will be a left shoulder. I'm just gonna take one. Okay, I think a triangle will be fine. So here is your triangle. There we go. There. Here. Then there we go. No. Okay, let me just take that shape again. Try doing it better this time. There we go. Okay, there we go. Let's take the triangle again. Sorry about that, guys. So here we go. So yes guys, as you can see, this low and this low, they form one straight line. I just can't draw it perfectly here. Okay, so now, as I said, now as you can see, now you had your higher high, your higher low, then you had your higher high, but the correction of this higher high now is equal to the correction of this higher high. Then that's when you have your neckline, what we call the neckline. I'll take the horizontal line. Okay, let me just draw this triangles so that they don't look like a mess here. Okay, there we go. Alright, so as you can see, this uptrend, when it gets here, it shows that it's losing momentum, because now after this correction we don't have a higher high that breaks this one. We just now have what we call a lower high. Okay, that's not that. Yes, it's the text. Now we have a lower high. Alright, then there we go. Here's our lower high there. Then after that lower high, we had a massive drop and the break of the support, which we call the neckline. After this formation has formed, you must just be aware to see that this might be a reversal pattern, and if you had your buy trades in, just make sure you close and maybe look for another trade. So I just want to draw this just to show you there we go. You have something like that. That's what. Okay, no, I drew a messed up way. Okay, let me just draw it again now. Okay, here we go. Left shoulder. Bad drawing. Okay, left shoulder. You have your head, and then you have your right shoulder. So that's how you draw your head and shoulder. So, and the best way to enter a trade is after this head and shoulder is formed. After this head and shoulder is formed, then a break of that neckline and then a retest. It's best. But if you want to take your trade on the neckline, just remember that from your entry, the movement from your, let me just take that two. Where's the two, guys? Okay. Price range, if you take this neckline here till there, which means it's around about 90 pips, yes. Then again, now take this from here, from that neckline, okay. So usually they say like it moves like the same pips as from this neckline to the head. So from this neckline, maybe you target 90 pips. Let's just see what would be your TP. 90 pips, somewhere around here. But I think the safest way to also trade this pattern is to wait for the neckline to be broke, a retest, then a drop again. Just enter. Perfect entry would be here. This would be our perfect entry. Perfect entry. Alright, then there we go. So the next thing now, we're gonna look at our cup and handle formation, which usually is a continuation pattern also. Let me just switch on the slide and I'll be back with you guys again. So as I was saying, we're gonna look at our cup and handle formation. Let's just go to GBP CAD H1. GBP CAD. Here is H1. So let's look for a cup and handle here. Alright, there we go. Okay, so as you see now, we have this uptrend. All right, the market is trending up. So when the market is trending up here, it will form left edge of the cup, left edge of the cup, left edge of the cup. Okay, there we go. That's your left edge of the cup right there. Left edge of the cup. Then another thing is now after this left edge of the cup, we form a oval-like or round-like shape, a cup-like shape actually. So let me just go to my drawing tools. So there we go. Let me just draw this cup-like shape and just finish it on. Alright, there we go. Now let me just go back then. So as you can see, now we have the left edge of the cup. Then that left edge of the cup is form almost like a straight line.
which is aligned with the right edge. But remember guys, these things are not they don't show perfectly, so the left edge and the right edge can't be perfect because it will be obvious for everyone to see, and you know the market makers don't want to make things obvious. So there we go. I hate this color. Let me just use a different color there, yellow. So the market is trending up. You have the left edge of the cup, and then you have a cup like shape. So from this left edge, the market moves in this cup like shape, then the right edge touches the left edge of the cup. Let me just write the right edge of the cup, right edge of the cup. So as you can see, let me just take this for you guys so it's visible. So here is the right edge of the cup. I'll put that there, but here is the right edge of the cup. So as you can see, they're almost aligned with the left edge of the cup. So what needs to happen is that after this is formed, now when this right edge hits where the left edge is, we must have a pullback. Then after that pullback, a break in that resistance that was formed by the edges of the cups. Then after that, it's either retest of this what we call this resistance formed by the edges of the cup, or the lowest entry that you can go for is when the low is aligned with the handle of the cup. So as you can see, after here the market pushed up. It's a few pips, but let's just see. Let's say you entered here. Let's just see, you could have caught around about 80 pips. Yeah, 80 pips there. Nice, as you can see. So that's how we draw our cup and handle, guys. So now I'm gonna go on to one of the best indicators, which is the exponential moving average 89. So without wasting any time, let me just add it here. So as you remember guys, we add here our indicators. So let's just say EMA. Oh my god, where is it? Let me just oh, it's a mistake. Okay, EMA, moving average exponential. But we want, let's delete this so that everything can be clear. So what you want to do, you want to change the settings of this, change them from 9, change the length from 9 to 89. So now as you can see, now this EMA, it acts like a sort of a support or a resistance, because the chart keeps bouncing back on to retest it. As you can see now here, I'm gonna give you an example with our uptrend. So as you can see now, let's say this was a downtrend. So the market now is transitioning, it's changing from a downtrend to an uptrend. So how do we see this? You see now we have our head and shoulder here, inverse head and shoulder. Right, then I'm just gonna take shapes and we're gonna draw another shoulder, then that you have your head, then there you have your shoulder again. Alright, there we go. Now as you can see, now you have your shoulder formed, now you have your high there, and then your low, then you have your high, which is equal to the correction of the left shoulder, and now they form a straight line, which now becomes a resistance. Now after that, now you have a correction from the neckline, okay, then that forms your right shoulder. then a break of that neckline, we have your uptrend continuing. Now let me just delete this eclipse. Now as you can see, the EMA acts as one of our signals again to show us that the market has changed momentum. Now it broke it, as you can see here, it broke it twice, but then the perfect entry is when it retests it. And during our uptrend, as you'll see, it keeps on coming back to retest our EMA 89, as you can see that, as you can see it also there. Yes, so you can use EMA 89 just for confluence. So if market is in the uptrend, the chart will go back and just test the EMA 89, and the same if you're in a downtrend. So the EMA 89 will be below your, let me just go to a downtrend so we can see. Okay, here let's just say we have your downtrend, there we go. So now your chart is moving below the EMA 89 and keeps going back and testing it, as you can see here and here. Is anything that you didn't understand on these concepts we covered today, just email us your questions. DM us your questions on Instagram. Our Instagram page is universe_traders, and then, or you can ask here on YouTube comments. We will be happy to answer your questions. Hope you had a productive lesson and it has added something in your trading skill. Thank you.